This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio, special edition of Your Money Matters, brought to you by our good friends at Affordable Interest Mortgage, your one-stop shop for all of your mortgage needs. That's them, Affordable Interest Mortgage, 720-895-0500. And with that, we will welcome the proprietor of Affordable Interest Mortgage, Kurt Rogers. How are you, sir?
I am fine, Scott. How are you doing?
I'm doing well, sir. Doing well.
Still like that little scruffy beard.
Yeah, I'm
Makes you
trying
look like a
bit.
little mountain man
kind
there.
of like trying to get my best Kurt Rogers look going here. Yeah. So fill us in. What's happening in the mortgage world?
Well, right now we're starting to see a lot of people wanting to take advantage of where the rates are. You can still get a 30-year fix in the mid-threes, but one of the main reasons for that is that we think that there's a lot of activity. We're all talking about rates going up. Well, if with the property values increasing as much as they have and people having a hard time trying to find the homes that they want, they're starting to decide either I need to pay off all my debt or I need to improve my house to where it's more like what I want and increase the value. Because as the rates go up, eventually those values are going to stop. So that opportunity to pull money out at such a low rate and fix your home and improve the value or get rid of high interest rate credit cards, we're seeing a lot of people wanting to start to take advantage of that because real soon, and I'm talking 60 to 90 days, those things are going to start to move.
Okay.
And then that opportunity, as much of that opportunity is going to be gone.
All right. So, and it's a free consultations, we call it.
Yes,
for people to call you, just see if things work out in their favor and see if it's a good move.
Yeah, it just pick up the phone and call because I actually have a lot of people that's exactly what they're doing. They say, okay, what do you think the value is? I need this much money. What will it cost? How do I pay this off? And we just sit and talk about what your goals are and what's the least expensive way for you to get there to take advantage of these. You know, there's some people that got mortgage insurance. And, you know, when you buy a home with mortgage insurance, that might be the way you need to get the home. But do you understand that by paying mortgage insurance, you're actually increasing your interest rate about 1.5 points? So if you got a rate of 3, right, you're really paying 4.5% because the mortgage insurance is making your payment that equal to 4.5%. Plus, the mortgage insurance is not tax deductible. So if you have any of those things, now's a real good chance because we have loans to 98% no mortgage insurance. So you can refinance and get out of the mortgage insurance and still lower your payment and have it tax deductible where it's not now.
Right. Recently, we did a show together on with veterans and talking about all the different things that are available to veterans. Is this a good time for veterans to be looking at maybe buying a home?
It's actually a wonderful time because the VA rates are in the low 3s. They have no mortgage insurance, and they'll go to 100%, 100% for a purchase or 100% cash out. So if your house is worth $400 and you owe $320, you can pull out $80,000. There's no hits to that. There's no cost to that. You just get the money. So you can use it anywhere you want. And when you're getting interest rates that low with no mortgage insurance, that's a phenomenal opportunity. So when we talked about it on the show, if you're a veteran and you're even thinking about buying a house, take advantage now. Sure. Or if you've got cash available in your home, get it.
Gotcha. 720-895-0500. Once again, Kurt and his team will be able to help you out, and whether it's like for a brand new mortgage, you want to refinance, reverse mortgage, whatever the case may be, they can help you. Well, glad to also welcome in studio Greg Lackey. Greg's frequent guest with us here from Accelerated Insurance Group. And how are you, sir?
I'm doing well. Thanks, Scott.
Well, good to see you. And, just real quick, and we'll spend a lot of time on this, but it's certainly our thoughts and prayers still go out to all those folks that were in Vegas and lives that have been affected, and, of course, those that lost their lives there. And Greg's son was actually there at the concert and actually had a friend that got shot. Now, thankfully, the young man's going to be okay, it looks like. But, that's a call or a text you don't want to ever get as a dad.
No, obviously these shootings are not new to our country, but never has it been as close to home for me, obviously, as this one was. But it really makes you stop and reflect, and
sure.
And I would say the last 36 hours have been very interesting.
Yeah. I mean, it's emotional just thinking about it. I mean, just thinking about your son being there only, and all the different lives, and it's just horrible tragedy, and so certainly want to keep all those folks in our
Yes.
prayers.
Well, and again, as I told him yesterday, I mean, the thing that we all have to do is get back to work, and because you don't want to allow this mentality to affect
Sure.
your everyday challenges in life or whatever. And I think he's one of the fortunate ones. There's right now 59, 60 people that don't get a return.
They don't get that opportunity.
And so I think, out of respect for them and their families, that we all need to come together and hug each other.
Sure.
And see if we can somehow try to make sense out of all this.
Yeah.
Our difference has really gone that far that we just can't stop. And, you can be angry at things, but let's just stop.
Mm-hmm.
And no matter if you agree with the person or not, show them the respect and say, okay, let's have a conversation.
Kurt, one of the things that was interesting what he said was, because we were sitting there last night, and obviously there's a lot of stuff on the news and so forth about whether all the political stuff that's taken place or the attack on the NRA or whatever. And he looked at me and he goes, "Does it really matter?"
Does it change the facts?
Mm-hmm.
No.
He said, "When I ran out of there," he said, "I didn't know. It didn't matter to me if people were black, brown, white, purple, pink, Republican, Democrat. It didn't matter." And he goes, "And when I got out of there, it still didn't matter.
Yeah.
We got out of there."
Yeah.
And so for him to hear all the noise on the media and everything, I think that's been hard, really hard. And obviously, you think back of all the other shootings that have taken place, and I understand those parents. I understand a lot deeper their thoughts. So, but thank you.
Yep. Again, Greg Lackey is with us, Accelerated Insurance Group. Take a minute and just tell us about your company.
Well, we're an all-around insurance company. We offer everything from commercial lines to personal lines, auto, home, and then obviously health insurance. We do a lot of consultant work for small businesses on, what might be the best way, or insurance companies or what they're looking for. And obviously with November 1 rolling around here and the open enrollment, we're trying to gather information and just see what all this is going to lead to.
Sure. Anything changed much from the last visit to now of the madness, or are we any closer to getting any kind of system in here that's going to be a good thing for Americans to have health coverage?
No.
Okay.
I like that short
Thanks
answer.
for joining us today. Yeah.
No, obviously I'm sure people are well aware of everything that was going back and forth there, not once but twice, and trying to get some changes made, and for whatever reason, and who knows why, or it just seems to me that some people are really, really out of touch with what is going on in the health industry. I thought the recent deal with Graham Cassidy made a lot of sense from the standpoint of giving the power back to the states and allowing the states to make decisions for their people, because let's face it, I mean, it doesn't take a rocket scientist to figure out that living in Wyoming is a little different than living in California.
Yes.
And it doesn't take a rocket scientist to figure out that there's a lot more room, or a lot more miles in between a medical facility in Wyoming than there is in California. And so, those two states probably should go about trying to address this issue according to those demographics or according to those regions. And so that really disappointed me. The other thing, too, is just the amount of misinformation. And we've talked so much about this, from the media. And and again, not to get back to this Las Vegas thing, but the irresponsibility in our media today is it's frightening. I mean, it's really they don't report the truth. I mean, I'm sitting here on this health thing, and I saw an article in the Denver Post where some guest commentary was talking about her insurance rates, if this thing went through, would go to $26,000. And I'm like, well, how do you know that? I mean, that doesn't even make sense. But the fact that she's allowed to have a place in that paper, I'm like, I don't understand that. How do you know it's going to 26,000 when we don't even know?
You don't even have the rates.
Yeah,
we don't have the rates yet.
You don't have the rates yet. And she was doing all this, and I'm like, it's just mind-boggling.
It depends on which side you're on.
That's exactly right. It gets
does.
down to the narrative, and so you get back to your people that are in D.C. representing us, and again, I've been very harsh on Cory Gardner, and I never quite know which way he's going with things.
Nor does he.
Nor does he. But
Nor do any of them.
Yeah, but so again, kind of a long-winded answer to your question there, Scott. Is I think I know things in 2018 are going to be what they are. It's too late, and so we've already seen some letters and starting to see some rates. So
yeah, I was reading an article the other day to where it looks like as the rates go up, in some states it's 10%, in other states it's as high as 49%, but they're like having a tendency to say, okay, well, it's all the new administration's fault. And I'm like, how did that happen? How did they get the blame in 8 months?
Narrative.
Yeah. What did they do the 8 months to make the rates go up any higher than what they were already going to go up?
What they're saying there, again, it gets back to the reinsurance program, gets back to the subsidies. And the insurance companies were not sure if they sold a policy through Connect for Health, and let's say that policy was subsidized by $500, that they were going to get their money from the federal government. Because that policy, let's say, cost $900, the insured had to pay $400 of it, and the federal government, due to the subsidy based on their income, was the insurance company was going to receive $500 from the federal government to make up that difference. Well, the insurance companies were never convinced that those subsidies were going to continue, because the administration was, they were trying to get this bill pushed through and so forth. Personally, I would have probably liked to have seen those subsidies not get paid, because until this thing becomes catastrophic, I don't see it moving.
And that's the funny thing. You hear a lot of people talk about that. I mean, from Trump across the board, let's wait for it to blow up before we try to fix it. And that, to me, just doesn't make common sense. But it looks like it's going to have to get to that point before we decide, okay, let's find another solution.
2014, when the Affordable Care Act was put in place, Trump wasn't there last time I checked. He wasn't there until November. This thing's been collapsing. I mean, I've been on this show many times.
Yes, you have.
And this isn't new. But again, it gets into politics. It gets into shifting people's focus over to something that's not there. But they'll believe it because, again, it's what they want to believe, and that's unfortunate.
You're listening to Haystack Help Radio in a special edition of Your Money Matters. We got to take a short break. If you got any questions, comments about healthcare, we'll open up the phone lines, 303-477-5600.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code radio50. 303-325-2776. That's 303-325-2776.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt? Make that long-needed home improvement? Or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR and MLS 298191. Equal credit lender.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Tired of walking into gun stores and seeing the same guns everywhere you go? Check out our sponsor, Old Steel Historical Firearms. Hi, this is Scott Watley of Sportsman of Colorado. At Old Steel, they specialize in the purchase and sale of historical firearms. Need to get your firearm collection appraised? They can help. Buy, sell, trade, and consignments are welcome at Old Steel. Open 10 to 6, Monday through Saturday. Old Steel Historical Firearms is located at 12 East Girard Avenue in Inglewood. That's just 2 blocks north of Hamden off Broadway. Now you can own a piece of history at Old Steel Historical Firearms. Call 720-662-7252. That's 720-662-7252. Check out their website, oldsteelguns.com.
Well, we did it now. Hi, Dan Johnson from Lynn Lyle Chevrolet, and we received a special allocation of over 600 new Chevrolets, and we're out of room. So to relieve our problem, check these deals out. A 2017 Silverado Crew Cab 4x4 for up to $11,000 off MSRP, or lease a 2017 Chevy Cruze for only $199 a month, sign and drive, or a 2017 Chevrolet Equinox for up to $6,000 off MSRP. Go east and pay the lease. Lynn Lyle Chevrolet, I-225 in East Colfax, or on the web at lynnlylechevy.com. Chevy, find new roads.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio and a special edition of Your Money Matters. If you're just joining us, my name is Scott Watley, along with Kurt Rogers from Affordable Interest Mortgage. Our guest in studio, Greg Lackey from Accelerated Insurance Group, talking a little bit about our health care, or lack thereof. And, you know, a lot of things you don't ever look back and think we'd ever be in this shape in the United States of America. But, wow. It's just crazy.
I would have never thought I would be paying what I pay in premiums for health insurance when I had kids at home.
Sure.
Much more at the age that I'm at now and being healthy. And it's like you have to re-budget everything. Mm-hmm. When you start factoring in, you know, taxes and all the insurances and now your health insurance, you're like, okay, what's left over?
And most of us got deductibles. I mean, most people I meet are $4,500 to $6,000
right?
for
Mine's
deductibles.
$6,000. And my wife
Plus
has gone through that this year.
Hefty monthly payment.
Yeah. And it's just like, where does it come from? How do you survive and get by? It becomes tough. And unless you're with a big company, there's a small percentage of us that are facing this, right. The ones that aren't with big companies. So you struggle every day. And they keep talking about well, it'll be okay. It's not going to be okay. That's where you talk about it's going to implode. You just can't afford to do it.
Mm-hmm.
Let me read an email that I got over the weekend from a customer. And again, like I said, with the Denver Post and the guest commentary and the $26,000 premium and just all the stuff you have heard. So I'm going to read. And I called the client yesterday and I said, I'd like to share your email. I said, I'm going to be on a radio program tomorrow. I said, really like to share your email. And I said, I've also forwarded, if you don't mind, I'm going to forward it on to a couple of senators' offices. And let me kind of set the background with this person and her family. Family of 4. They're in Colorado Springs. Her 2 sons have some health issues, and she's diabetic. When I first started working with these people, we were paying $900 for a Blue Cross plan. And Blue Cross...
For the family.
For the family.
Okay.
Family of 4. So Blue Cross, because of their doctors and the fact that the one son really needed access to this particular doctor, Blue Cross was our only choice as a result of networks in the Colorado Springs area. Right. So last year, their premiums went to $1,728.32. Now I'm gonna read the email. Greg, I was expecting to get an email from Anthem canceling our plan, but what I got today was a letter that said we could continue our policy with just a couple of small changes. The rate goes from $1,728.32 to $2,439.12. Geez, only an increase of $710.80 a month. Our deductible is now $5,000/$10,000 for a family. Our max out of pocket is $6,550 for one, and then $13,100 for the family. Now, this family has hit deductibles both years.
Oh, sure.
Okay. She says, and she's got a lot of signs here on the end. She goes, what kind of options are we going to have during the open enrollment? Do you have any information yet? I hope all is well with you. I'm not a happy camper this morning about this, but I didn't mean to be rude. And again, I mean, it's a family that is trying to figure this out. And this is what's coming, November 1.
Mm-hmm.
They've gotten a letter from Anthem. Now you can do the math.
$2,400.
Okay, think about this. Think about this. They've maxed deductibles. Okay,
in the past.
In the past, that's $13,100. Plus, if you take $2,439.12
$27,000, $28,000.
It's over $29,000.
Yeah.
So they're looking at $42,000
in net.
In net.
Net. We're not talking gross. We're talking net. They have to bring that into the household.
Or they're going to have to find a different doctor. Because there will be some options with a different premium, a lot less than what Blue Cross is offering here. And let me remind you, this is a bronze plan. Mm-hmm. This isn't silver, this isn't gold, this is bronze. So if anyone out there has an idea what I should tell these people, I'd be really interested. Now, last thing I heard, if you like your doctor, you can keep your doctor.
Right. Well, you can, you just have to pay more. A lot more.
This is out of control. Mm-hmm. I mean, it is completely out of control. And I called her, like I said, I called her yesterday, and it's just a great family, and they've got some tough things. And I'm thinking, I hear about every time the Graham Cassidy thing, and I saw it today, 75,000 kids are going to lose their insurance out of CHIP. And I'm thinking, well, these kids are going to be on CHIP because you're going to drive these people right into bankruptcy.
Mm-hmm.
And they have no choice. They have to have the insurance.
Sure.
Especially in their position.
And she goes, Greg, when we started this, we were at $900. I said, I know. So I ran rates with another company. So if you're a family of 4 in Highlands Ranch, 40 years old, 2 kids, let's say 12 and 10,
mm-hmm.
with Bright Health, which is a Centura network. You're seeing their advertisements on TV. An HSA bronze plan is going to cost you approximately $1,100 for a family of 4. If you're looking at a gold plan, you're looking at $2,400. So again, depending upon, how much you're using it, so forth, this is what people are faced with. And a lot of people, say, well, I get my insurance through my work. Well, let me tell you, it's coming your way. It's just going to get there a little slower. But you're going to see your employer come to you and say, hey, we got to raise deductibles in order to get something affordable. Which means if they raise deductibles and you're using the insurance plan, guess who's paying?
You are.
You are. And the same is true with, the employers are going to start. There was something I read the other day about how much the cost has shifted from the employer to the employee in the last 3 years. Mm-hmm. As they start to shift more costs, well, then you see wages get stagnant. You see home prices continue to go up. And you just wonder, where does this meet? Where does the rubber hit the road?
Yeah, well, when you look at a family like this, if there's a family of 4, and they're paying $40,000, $42,000 a year for that, and let's say their house is $400,000, they have to be netting close to $70,000 to $75,000 a year. Forget food, forget gas, forget entertainment. That's just to have a place to live and take care of my children. What point, like you said, what point does that stop? When do you finally say, okay, enough is enough? I can't deal with this anymore.
I have said all along, and there was a real interesting debate the other night on CNN, and they didn't do a very good job of publicizing it, but it was between Bernie Sanders and there was a senator from Minnesota, and then Lindsey Graham, and then the guy out of Louisiana, Cassidy, who's been kind of in the spotlight with the comedian or whatever.
Right.
Yes.
And I thought Cassidy, of course, he's a doctor, so he understands this a lot better than most people because he has seen it on both sides. But I thought he was really, really good actually in explaining. Now, when he was talking, I'm sure he was talking over people's heads because to understand health insurance is not always an easy thing to do. And but I thought the exchange was really good, and I thought we needed more of that to educate everyone on where we're headed with all this. Bernie Sanders, obviously, one payer system. Now, what I find interesting about Bernie, he's changed that to Medicare for all. Now, why has he done that? Because he loves semantics. Because if you go around and say one payer system, you're going to scare the Medicare crowd. Theirs is going to go away. But if I say Medicare for all, then they think they're keeping their Medicare.
Right.
Not understanding, no, you're not. But that's the direction he sees things going. His counterpart from Minnesota, she was pretty quick to kind of distance herself from Bernie because Lindsey Graham said, so you are for a socialist system. And she was like, oh, no. In fact, she went on to say, she said in Minnesota, her and another colleague had presented things in the state of Minnesota on how to help out insurance. Cassidy immediately said, well, that's what we're proposing. We're trying to move everything to the states so you can make a decision on what's best for the people in your state. And she just backed off of that. But again, I thought the exchange was, and I think we need more of that. We need more education.
But the last statistic I heard about the one-payer system, and I think it was after this conversation, they said that the government would spend $180 billion a year for the plan, but you don't have enough money in it to make it work. It would go bankrupt. It would eventually increase if you covered everybody to about $460 billion, and there's not enough money in the tanks to pay for that if you're going to a one-payer system.
And again, that's all based on the costs we know today. So if you're and Cassidy brought this up. He said, if you're looking at innovation, where's it going to come from? Because if you want innovation, you're going to have to put money into something in order to help run those tests to figure out if this works or not, or whatever the innovation might be. Then you're going to have to go back to the taxpayer, and you're going to have to say, hey, we've got this new product available, but we're going to have to raise everyone's tax in order to pay for it. Well, look at Colorado in the gasoline tax. Look at our roads. We haven't had an increase in gasoline tax since '93, because anytime you bring tax to the people, they go, what? No. And that's what they're trying to do with your health care. So anytime there would be innovation available, you're going to have more money to pay for it. And if the taxpayer's paying for their health care plan, well, what do you have to do then? You got to raise tax.
Mm-hmm.
You're listening to Haystack Help Radio in a special edition of Your Money Matters. When we come back, we're going to talk a little bit more about these, what's driving these rate increases and, talk about different people in different areas of the state. What about on the Eastern Plains? Different things like that. And Greg's going to help us out. We'll be right back.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those who have given so much. Donate now at freedomservicedogs.org.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
This is Scott Watley for my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms open 7 days a week. 720-468-0050.
Got a question for the station? Email info@crawfordbroadcasting.com. Now back to Haystack Help Radio.
And we are back. You're listening to Haystack Help Radio, a special edition of Your Money Matters. Once again, brought to you by our good friends at Affordable Interest Mortgage. Give them a call if you got any mortgage needs, 720-895-0500. Offer a free consultation, and Kurt and his crew will be glad to help you. Greg Lackey is our guest, Accelerated Insurance Group. Now, Greg, I said before the break, and boy, Charlie brought up a great question we're going to get into, but, you know, what's really driving all these different rate increases?
Well, I mean, currently, these rate increases are being driven by the fact that, pre-existing conditions, you have to accept everyone. There has not been enough attention paid to people kind of opting in and opting out. Mm-hmm. So again, people buying insurance when the house is burning. Now, I would say this: in the last probably 6 months, we've seen a real focus by both the exchange and the insurance carriers to determine qualified events. So in other words, someone buying a health plan outside that open enrollment period. They've gotten very, very stringent on that, which is good.
Yes.
But the when you tell an insurance company that they have to cover X, Y, and Z, that's going to raise cost. And that's the mandates that we're given with this, the 10 essential benefits that our former president, I've heard him recently talk about, well, those benefits can't go away. Well, if you want the insurance companies to come up with a plan that people want to buy, they want to buy something that pertains to them, not something that necessarily pertains to everyone.
Right.
And that's where the challenge is right there. Again, you get back, you look how an insurance company is put together. I mean, they're put together to analyze risk. And they'll look at the risk and they'll say, okay, we'll take that risk, but at this cost. Well, when you charge everyone the same price and there's no mitigation of risk, I mean, that insurance company is just a bank. That's all they are.
That would be like in my business. If you have a 780 score, I'm going to treat everybody like they have a 670 score.
Correct.
So everybody's paying the same as that person with a 670 score. So your rate and your cost to do the loan is going to be higher. So the fact that you earned and worked hard to get there has no relevance over here. It's kind of the same basic.
It's the exact same thing. And then what happens if there's someone who doesn't pay someone back in your business?
Yeah. We foreclose, and then we're all going to kick in to pay for that foreclosure because you see that. It's all coming back. Now, we've talked about this in the past, about when they initially set up Obamacare, that the insurance companies had a limit as to what they can pay. So they said, okay, we'll take all these claims. We'll take all these people with problems. But at this figure, that stops. So they could capitalize their risk and understand what they were doing. But that, you had mentioned before, that's one of the things that has changed.
The reinsurance program was one of the things that kind of got things, out of kilter back a couple of years ago. And because they quit paying on that reinsurance program to the insurance company. So the insurance companies then were now dealt with a set of rules that had changed. And that's one of the things that they're blaming the Trump administration for. And there's some truth to that. But again, what the administration is saying and what, Cassidy and Graham are saying, we can't continue to pay for this. We've got Medicare and Medicaid that are already financially challenged. Medicare in the next 11 years they're out of money. And you look at your demographics, you got all the boomers going into Medicare. I mean, what are we to do? And that's what they're saying is, listen, either we address this problem right now, or it's going to be a huge problem even further down the road. And I think that, again, if you're, on the Bernie Sanders side of things, they're just sitting there going, let's just get there because we're going to force you to go into a universal system. You'll have no choice.
That doesn't work because there's a state,
and it doesn't work.
Vermont or Connecticut that tried it?
It doesn't. And again, you get back to, we're arguing insurance right now. Pretty soon, everyone might have an insurance plan, but guess what you won't have? Care.
Yeah.
Because you can't tell the doctors to accept whatever the government's going to reimburse them, you'll have a certain percentage of the doctors that say, you know what, we'll just set up our own private facility over here, and whoever has money, that's who we'll take. And depending upon your income, will determine where you go to get care. And if that's where everyone wants to go, then that's where we're headed. Mm-hmm. So if you don't want to go there, then I would suggest that you become very vocal, just like we've seen when Graham Cassidy or any of these proposals have been made from the Medicaid crowd. They've gone down there and laid on people's floors because they're fearful that their Medicaid's going to go away. Their Medicaid wasn't going to go away. But we see what a protest will do. And at some point, the people that are affected, and as I told my customer yesterday from Colorado Springs, at some point, this has to get out there. Right. And you've got to start banging on doors.
Why do you think this Graham Cassidy thing failed?
Because the states that expanded Medicaid need that money from the federal government. The increase in Medicaid gets higher and higher every year. The states were worried that, okay, they're going to give us a lump sum of money, and then we're going to have to tell at the local level who gets it and who doesn't.
So they had to pick up the responsibility.
Exactly, and they don't want it. Because they went out and expanded Medicaid in 2014 knowing, and you can't tell, this is where I get real disappointed in John Kasich. He knew what he was doing, but he did it for political reasons when he expanded Medicaid. Now all of a sudden he's handed the bill, and he doesn't like it. So he's quick to join with our governor here. Yeah, we got to come up with something different.
Yeah, because some states were actually going to receive extra money, and they'd have more to be able to take care of, like Wyoming and things, and California, New York, and even Colorado was going to lose some of that.
Right now, and when it comes to Medicaid dollars, you have 3 states that are getting like over 30-some% of those dollars. So everybody else is kicking in. And they're just playing politics in those 3 states. At some point, you have to say, this isn't working. And then you're going to have to come up with an idea. That's why I liked what Graham and Cassidy were pushing. Let's get it to the state level. Just like I told my client yesterday, if it was at the state level, you would know who to call.
Yeah.
When he gets to the federal level, who do I call?
Or who to go see.
Exactly.
I'm going to go knock on your door.
Exactly.
Gardner, hello.
Hello.
We need to talk.
Yeah, we need to talk. Instead of you worrying about Rocket Man in North Korea, how about you come home to Yuma County and start looking at the people on the Eastern Plains and explain to them why they have one choice out there and at this premium.
And they're paying $40,000 yearly to folks in the Springs.
Right. Why are you running around worried about North Korea? Yeah. You've got your own people that voted for you, that puts you in the position of power. Would you please listen?
Yeah.
And every time there's a negative article, run from it or have this disposition of, well, I'm not quite certain yet. Well, let me come speak to my client, Colorado Springs. Explain to her how $42,000 looks. He might have the pockets to handle that.
Yeah.
Before our break, let's get into this a little bit, and then we'll come back after the break and talk about it. But why is there such a disparity between, and I think we've all known people that have, had insurance and they get a bill from a hospital versus those that go to pay cash. And it seems like a lot of times it's like 1/3 of the cost if you pay cash. So the markup, the margin, and it's not even the same between hospitals. And we were kind of talking in the break a minute ago. I said, I bet you if you went and had a knee replacement at 4 different hospitals, your end bill would vary probably $5,000, $10,000 on the same procedure.
Charlie brought up a great point. He was talking about transparency in procedures. And I agree. Transparency on a doctor's visit, on blood test, X-ray, those things need to be disclosed. Where it gets a little bit more complicated is if you go in for a gallbladder or something like that. Yeah, we're gonna charge you this, but while they're in there, they find something else or something else takes place. Then there's additional cost, etc. My take on that has always been the way we've provided insurance. And with copays, because what the insured does a lot of times is they're just worried about what their responsibility is in it. Well, our deductibles in the past have been so low.
Right.
And co-pays have been so low. Remember $5 co-pays to get a script, or you had a $100 deductible? Well, what happened is we built a mindset of people that really, they were only concerned with what their cost was. Well, you think about it on the other side, the provider is charging what to the insurance company? Did anybody check that?
Well, Charlie mentioned that. He said even though he does, he said he checks all of it.
He checks it
everything.
now, and a reason, I'm sure, and we'll confirm this with Charlie at the break, but as deductibles have gone up, people have all of a sudden started being more self-aware of what the charges are. They're looking at it going, wait a second, I didn't get this, or why are they charging me this or that, and so forth.
See a bill that says it's $2,000 if I pay, but if it goes to the insurance company, now my share is $2,500 and the total cost is $5,000. Like, how did that same thing change just because I now have the insurance?
Then you get billed from the doctors or the doctor's assistant in the surgery.
Because they're not on contract with the insurance company.
Exactly.
They're not on contract, so the anesthesiologist is not necessarily contracted with the insurance company, but yet he's in there. You as the client or patient, you don't know that until you get the bill. Then you figure out, well, why is he charging this?
And they weren't in, because I've had that happen before, where they weren't in network or something. All of a sudden, the assistant doctor costs more than the other doctor. Yeah.
And so if you get back, health savings accounts, what I would like to see is everybody say, okay, you've got a health savings account, and you're on the hook for the first 1,000 or 500 or whatever that number might be, because once that happens, once you get rid of the copays and everybody's on the hook for a certain amount, then you're going to see the provider go, you know what? If we want people coming through these doors, we need to publish those prices, and we need to compete for their business. But as long as you have copays, people go, I got $20, or my lab work is this. There's not as much pressure on them.
That's a different mindset, because we never looked at healthcare as something that needed to be, that you shopped for price. You were shopping for care, not insurance.
I know we're up against the break, and I'll give you one quick one. I just went into my healthcare's with Kaiser right now, and I went in to see a guy, and he told me to come back in 3 days, and so I come back in 3 days, and he takes a quick look. You're good. Well, I get a bill for the initial visit, and then I get a bill for that second visit. And so I called Kaiser, and I said, listen, had I known that you were going to charge me for him when he told me just to come back, let me take a quick look, and I spent 2 seconds with him, and you were going to charge me the same, I didn't ever come back because I was fine.
Because I knew I was good.
I got the antibiotics. I knew I was fine.
Right.
So I challenged it with Kaiser, and to this, as far as I know right now, Kaiser's going to take that away. But that's what you have to do. You've got to call them on it.
You got to start looking.
Yep, absolutely. You're listening to Haystack Help Radio. We'll be right back.
Attorney Kevin Flesh has the experience and the knowledge to get more than an apology from those responsible for serious accidents. Sometimes saying, I'm sorry, is enough.
Sorry about that.
It's all right.
But after a serious accident, I'm sorry just won't do.
Oops. Sorry about that. My bad.
When you've been in an accident and sorry just won't do, you need representation on your side that will get the job done. Call attorney Kevin Flesh at 303-806-8886. That's Kevin Flesh of Flesh Law at 303-806-8886 for a free consultation to find out if he can help you to get the compensation that you deserve.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR, NMLS 298191, Equal Credit Lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam. 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical you'll see the difference. That's 303-321-1578, stackoptical.com.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Hi, Dan Johnson, General Manager at Len Lyle Chevrolet. You know, I hear it all the time. If you give me a good enough deal, I'll buy your vehicle. So here it is. A 2017 Crew Cab 4x4 loaded for up to $11,000 off MSRP. Or how about a 2017 Chevy Cruze, sign and drive lease for only $199 a month? Heck, that's cheaper than a used car. And we'll pay top dollar for your trade-in. So go east and pay the lease. Len Lyle Chevrolet, I-225 in East Colfax, or on the web at lenlylechevy.com. Chevy, find new roads.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio. Kurt Rogers is with us from Affordable Interest Mortgage. Once again, if you have any mortgage needs whatsoever, give Kurt a call, 720-895-0500. Greg Lackey has been with us for the full hour today, Accelerated Insurance Group. If you've got any questions about insurance, you can reach Greg at 303-625-9538.
One of the questions I have, and President Trump's talking about another executive order, and this one is about helping the Obamacare and the health and the health insurance. He's wanting to go across state lines. Is that a good thing, bad thing?
Kurt, I'm not sure I understand the reasoning behind that, and why I say that is the networks have shrunk, and so you take Bright Health as an example. They're available at all the Centura facilities along the Front Range. Well, there's not necessarily a Centura facility in Wyoming, so you can buy a health insurance plan, let's say in Wyoming, or buy a Bright Health plan, but then you're coming all the way down here for your health care.
You can't get the care.
Yeah, and so I don't understand that. And then also, every state has a division of insurance, and what's allowed, what's not allowed in every state can be different. So to me, that just seems like this is a real challenge, a real reach, and I just kind of worry that, or shouldn't say worry, but I think he's trying to pick up political points more so than
it doesn't really solve the problem.
Doesn't solve the problem. It just kind of, hey, we did this and so forth. Now, if states were allowed to get rid of the mandates, the mandated benefits, then now you're onto something, because then a state could build a product that the people want. And now if you lived up in Cheyenne, you might say, you know what, I'll go to Fort Collins. If I'm close enough, that might make sense.
Yeah, that was my next question. Should it be employer or individual mandates?
Well, again, if you've got, the employer mandate is driven by, in my opinion, the free market. I mean, if I'm an employer and I'm competing for employees, benefits is probably something I'm going to want to consider,
right,
especially if in my industry it's a common thread.
Right.
So I think it takes care of itself. And when it gets down to the individual mandate, again, I mean, is the IRS following through on this? Are they taking money from anyone? We don't know. And again, the individual mandate, the dollars that were being, what your penalty were so
nominal.
Yeah, in comparison to what a plan cost. Again, make a plan that someone wants to buy and put it at a price that they can afford, and you don't have to worry about beating people over the head to get an insurance plan.
Now, what do they call that in this country? Competition?
Yeah. Right.
Build a better widget, and they will find it.
They'll find it.
Isn't that how that works?
Yeah, if they value it,
yes, they'll
buy it. But when you put something out there and say this has to contain this, and this, and it's at a price that someone's looking at going, well, I don't use that, they're not going to buy it. Well, then you're saying, well, if you don't buy it, we're going to charge you anyway.
Mm-hmm.
You do all types of insurance, and we always talk about healthcare. You've been on the show many times. Tell everybody what else you can help them with.
Again, we do a lot on the commercial side. We do a lot on personal lines. And the way we approach it is, with healthcare costs going up, what is your overall insurance spend? Maybe you haven't shopped your auto and home in a year or two. Maybe there's dollars available there to help offset these large increases we're seeing on the health side. And again, even if your employer-sponsored health insurance, I would encourage anyone to take a look at dollars that they've been paying to an insurance company. We work as a broker. You said this a little bit ago. It doesn't cost a call to get advice.
Nope.
If it works for you, great. If it doesn't, that's fine too. We'll tell you. And but as tight as dollars are becoming with people, we don't have one dog in the fight. We represent a lot of companies, and we'll just take what your current coverages are and make a quick comparison.
And as being a broker, you're not tied to one set of standards.
I'm not held captive by anyone. Thank goodness.
Well, good. Greg, hey, always great information. Again, Greg's number 303-625-9538. Kurt, thank you, sir.
No problem. I enjoy doing this. Thanks for coming back, Greg.
All right. And thank you for joining us today for Haystack Help Radio and a special edition of Your Money Matters. Once again, Affordable Interest Mortgage, 720-895-0500, AImortgage.net. Leave it right here on KLZ 560.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.